Two men, $1 million each. Same starting point, same year. One buys real estate, one buys gold. 20 years later, one of them is financially free. The other is still waiting. But here is the part nobody tells you. It is not the one you think. And by the end of this video, you will know exactly which asset wins, when, and why. Stay with me. Let me introduce you to two men who are about to make the most important financial decision of their lives. Daniel is 34 years old. He is disciplined, patient, and has spent the last decade quietly saving $1 million. He believes in things he can see and touch. He believes in property. He believes that land and buildings are the foundation of real wealth. So Daniel takes his $1 million and buys 2 residential properties in a growing city. He collects rent. He builds equity. He is proud of what he owns. Adam is the same age, same discipline, same $1 million. But Adam thinks differently. He does not want tenants. He does not want maintenance calls at midnight. He does not want to be tied to one city or one market. Adam buys physical gold. He stores it securely. He watches it quietly. No tenants, no repairs, no complications. Two men, 2 completely different strategies, both completely convinced they made the right choice. So who actually did? The answer is more honest and more useful than any simple winner could be. Let us look at Daniel's choice first. Daniel bought 2 properties for $500,000 each. Each property generates rental income of $2,500 per month. Combined, that is $5,000 every single month coming into Daniel's life whether he wakes up early or sleeps in. That income is real, it is consistent, and it arrives month after month, regardless of what global markets are doing. Over 20 years, Daniel's properties also appreciate. Real estate historically grows at around 3 to 5% per year in most stable markets. His 2 properties, bought for $1 million, are now worth somewhere between $1.8 and $2.4 million depending on the market. Plus, he collected rental income for 20 years, roughly $1.2 million in rent alone over that period. Money that funded his life, his family, and his future. But here is what Daniel also experienced. Maintenance costs that never stop. Problem tenants who damaged property and stopped paying. A period where one property sat empty for 8 months and the income disappeared. A market slowdown where property values dropped temporarily and Daniel could not sell without taking a loss. Real estate builds serious wealth, but it demands serious involvement. Now let us look at Adam. Adam bought $1 million worth of physical gold 20 years ago. Gold at that time was trading at significantly lower prices than today. In 2026, gold is trading near $4,000 per ounce, having delivered extraordinary returns over the past decade, driven by global uncertainty, currency pressures, and unprecedented demand from central banks worldwide, purchasing gold at the highest levels ever recorded. Adam's $1 million in gold is now worth significantly more. His asset grew, he paid no maintenance costs, he had no tenants, no vacancy periods, no repair bills, no management headaches. He simply held. And the world's financial uncertainty did the work for him. But here is what Adam did not have: monthly income, cash flow, the ability to fund his daily life from his asset without selling pieces of it. Gold grows, gold protects, gold preserves purchasing power across generations. But gold does not pay your monthly bills while you hold it. It is a store of value, not a source of income. And that difference matters enormously depending on where you are in life and what you actually need your money to do. So let us put the numbers honestly side by side. Daniel's real estate, $1 million invested, generated approximately $1.2 million in rental income over 20 years, and the properties themselves are now worth roughly $2 million. Total value created? Somewhere between $2.8 and $3 million from a $1 million starting point. But subtract maintenance costs, vacancy losses, management fees, and property taxes over 20 years, and the real net figure lands closer to $2.2 million. Still extraordinary, but the real number matters more than the headline number. Adam's gold, $1 million invested, is now worth between $2.5 and $3 million, depending on exactly when he bought and the current price at time of sale. No income generated during the holding period, no costs either. The growth came entirely from the asset appreciating in value over time. So on pure numbers, they are remarkably close, which means the real question was never which asset wins. The real question was always, what did you need your money to do while it was growing? That is the question that determines the right answer for every individual, and it is the question almost nobody asks before making the decision. Here is the framework that changes how you think about this forever. Gold and real estate are not competitors. They are not the same tool fighting for the same job. They are completely different tools designed for completely different purposes. Real estate is a wealth building engine. It generates income. It creates cash flow. It gives you something productive that works for you every month. It rewards active, disciplined, long-term management. It is the right tool when you want your money to generate more money regularly. Gold is a wealth preservation shield. It protects what you have already built from the erosion of inflation, currency instability, and global economic uncertainty. It gives you liquidity, the ability to convert to cash quickly when you need it. It is the right tool when you want to make sure that what you built does not quietly disappear because of forces outside your control. Daniel needed cash flow to fund his life. Real estate was right for him. Adam needed protection and simplicity during an uncertain period of his life. Gold was right for him. Neither made a mistake. Both made the right decision for who they actually were and what they actually needed. The mistake is using the... Before anyone puts serious money into either asset, there are 3 questions that cut through everything. Question 1, do you need income now or growth over time? If you need monthly cash flow to fund your life, real estate is your tool. It generates income consistently when managed well. If you do not need income now and simply want to protect and grow a lump sum over time, gold does this with far less complexity. Question 2, how much involvement can you genuinely commit to? Real estate rewards the person who treats it as a serious responsibility. Tenants, maintenance, market knowledge, legal obligations, these are real demands. If your life cannot absorb that involvement honestly, gold demands almost nothing from it beyond secure storage. Question 3, how quickly might... Here is what the most financially secure people that Mr. Max Wealth has studied consistently do. They do not choose between real estate and gold. They use both, deliberately, intentionally, and in the right proportion for their specific situation. They build cash-flowing real estate to generate the income that funds their life and grows their net worth actively. And they hold a meaningful allocation in gold, typically 10 to 20% of their total asset base, as a permanent protection against the unpredictable. The real estate earns. The gold protects. Together, they create something that neither can create alone, a portfolio that generates income and preserves wealth simultaneously. Daniel eventually added gold to his portfolio after watching his real estate income fluctuate during difficult periods. Adam eventually added a small property after watching his gold grow, but realizing it never funded a single month of his life without selling. Both men arrived at the same place from different directions. Balanced foundation of productive assets and preserved wealth, working together, quietly, consistently.